Okay guys, just a quick BTC update. You would remember that we had this in the Discord where we marked the demand zone off. Now the thing with demand zones is that we usually take the last down candle before an up move. I'm going to tell you something now that may change that a bit. So it doesn't necessarily have to be a red candle. Any down candle that took the liquidity from all the other candles would be valid, right? So in this case it's a green candle. In this time frame you can see it took the liquidity there, right? So we could use this down candle here. Alternatively, because this candle was mitigated, which means orders came back into it, you can see here price came back into it and back into it there, we could also have taken the next order block, which would be here, right? Then the plan was this morning, you can see here, from last night, was to long it from down here, which was around just below 18,727 up to above 19,228, right? So that's your 18,727 here, and long it up here. Now if we scroll down to a 5-minute, what you would also notice that I gave you in the Discord was another long area, right? Let me just try and pull that up quickly. Let's see if we can find it. It would be this one, right? So once price moved up as it did here, we broke structure here, we broke structure here, we had inducement here, price came back into this order block here and then moved away. We broke a higher time frame structure there, and what we were expecting was price to come back into the zone, right? So this was the expectation for price to come back into the zone. As it comes back, we look for a long up to this level here, and I'm going to show it to you in the chart, which was this red zone here, right? And you can see that price came back into the level here, the larger demand zone. But what we actually had plotted, I'll show it to you now. We actually had this one here plotted out here, I'm sure there, right, as a demand zone, and that would have been in green. So price touched, came back into the red level here. I just want to see if I gave you another chart here. I'm sure I did, saying you know what to do when we get back into the red. Just give me 1 second, guys, and that would be this here, right? So price pulled back here into this level here, and then shot up back into the supply zone there. So you'll see it here. Price came back here and then shot up into this thing, and then this was where we would place our shorts based on a short position based at the entry there, stop above this high here, and we're actually targeting, or I'm actually targeting down here around these lows, or this demand zone here, around here, purely based on the fact that we had this plotted out where price made an A wave up here. So we had this move down that broke structure, then we have an A, another A wave, A, B, C, which you saw here now, and then another C wave down to complete this B, and then finally a pump up from around this 18th, these lows, to this, which takes out this high and this high here. So that's going to be this move here, right? It's coming down here and then pump up here to around here, right? It can take the liquidity above there, may not. Usually in if it's slightly more bearish, it won't really take the liquidity above there. It would, but it definitely would take all the liquidity here and here, right? So that's the plan. And now you can see that price is here, and as price moved away from the red zone here and we broke some structure here, the pullback into this supply zone is the one to take with the stops above here. Now we just wait. You can see that we had a reaction off here. I'm just going to delete this here. We had a reaction off here and we didn't quite break structure yet. If we come below this low, I'd consider that a break of structure, which means that any pullbacks into this region here would be to short. Now your short areas would then be either the last up candle again, which would be here, this zone here, and you can see that there was some inducement here. So there will be, so if we break down here, a pullback into this level here would be for your next entry down. So that's basically what we're looking at on BTC. Few things to note that we had. So the yellow lines, as I mentioned yesterday, were the 4-hour bearish order blocks. And if we just put on our visible range volume profile, you can see that price bounced off the value area low and rejected off the value area highs here, right up to this one. So we'll look to come down here, if not lower, through this into those lows at 18k, which would basically be an extension of this move down here, right? So as an A, this is an A, B, C. We target a 1:1 extension around 18,324. So that's the plan for BTC from here. Come down here, and then one final move up here into this level, which would then give us an overall flat type of corrective structure. A, B, C, so that kind of structure there. And then we're looking for a move down here. The alternate plan that we had was price did this, price came in here, and we're looking for about 19.8. From 19.8 we should get a move down lower again, and then back up here and then fall lower. So that's the secondary plan, but for now I'm trying to keep with the flat type correction, which would basically be this flat structure here when it plays out, right? A, B, C for a B wave, and then a C wave up, and then down here. So what all of this is creating and leaving behind for us later on, where we could see a move on, let's just go to a higher time frame here. It's leaving a whole lot of liquidity, right? An inducement. So we have inducement there, liquidity there, there's liquidity above here, and then there'll be, at this flat, there'll be liquidity. So if we do get this move down here to break the lows here, just below 17.5, then what we have is a good contender for a larger flat type structure here like this, and for price to shoot up right up to here, or anywhere in this void here that takes all of this liquidity here, and rejects at the fair value gap or bearish order block way up there. So if you look at that much more neater, you'd see that the fair value gap starts here, and there's one that ends here. So this entire void, and then there's one obviously here to here, right? So we're looking at some point, once we break down, to take all of this liquidity here and fill the void at the same time. So that'll be for later on. It doesn't necessarily have to be now. So let's take it as it comes. Looking for a move down from here, like I said, here down to 18.35. Break this here would be a break of structure. Any pullbacks into this level here, just above here, is good enough, because that's where liquidity is. That's inducement. We had a structure like this, price pulls back up and takes that and go, and then you should see maybe a head and shoulders type pattern there. Right, so that's it for now. A bit of Elliott wave and price action mixed into one. Right, let's see what happens later on tonight or tomorrow. Hopefully I don't get stopped out, because we also have all of this liquidity lying here, just like we have all of this liquidity lying here. I'd like to take that into this demand and then see a reaction off that takes this thereafter. Okay, that's it for now. We'll monitor the price, and hopefully we get the 18.3 low here, then we can long that. It's quite a decent move from 18.3 up to at least 19.4. That's $1,000. Okay, thanks guys, that's it.